The W-4. Let's face it, at some point, most of us have to fill one of these out. And for some of us, we're filling out this form multiple times in the same year.
No! God, please, no! No! No!
But what if I told you this form could be setting us up for tax failure without us even knowing about it? Hello everyone, my name is Mike Kelly, owner of Mike Kelly CPA. In this video, I'm going to walk you through the different traps and limitations of the W-4 so that you don't end up owing the IRS a ton of money come tax time. And I'm also going to show you how to avoid giving the IRS more money than they deserve, so you can keep that cash in your pocket and that money working for you throughout the whole year. This is not a how to fill out a W-4 kind of video. I do have videos on that on the channel, which I will link below. This video is going to give you the tools and a professional process to help you determine if your current withholdings are enough or too much to help you determine where you need to be for your taxes. The W-4 is a form that is designed to withhold the proper amount of taxes from our paycheck. Most of us fill out the form to the best of our ability, turn it in, and hope and pray that we do not owe a bunch of taxes come tax time. But over the years, as a CPA who's been in this profession for the past 13 years, I've noticed there are a few glaring issues with this form that can immediately set us up for failure. The first issue I see is for a person filling this form out, we have no idea what our tax liability is going to be. The form does not address this. So how do we even determine what the proper amount of taxes to withhold is? Secondly, when we fill out the form, we have no idea or indication of the amount or percentage of taxes that will be withheld from our paycheck. Without knowing this number or amount, how do we even know that our employer is withholding the correct amount per payroll period? Third issue I see is when either a person has multiple jobs or a married couple where both spouses work and they each independently issued a W-4 to each of their respective employers. Unless they are continually updating their W-4 when each spouse receives a raise or life conditions change, at some point their withholdings just aren't going to keep up. And what ends up happening, and what I've seen in numerous occasions, is eventually they end up owing thousands or sometimes even $10,000 or more to the IRS, and they are completely surprised by it. With having no indication of how much money will be withheld each pay period, having no idea what your projected tax liability might be for the year in the first place, and add on top of that the ever-evolving life changes, a new job, maybe you lose a job, maybe you get a promotion, you get a raise, you can see that the W-4 has a lot of gaps. And it's kind of like trying to hit a target you just can't see. So not only can you not see your target, but the target is moving from side to side just to make matters worse. But what if I told you there actually is a way to reveal your target and to see your target and to have not a perfect accuracy, but a much higher degree of accuracy of hitting your desired goal? I'm about to share a few secrets to you. No! I'm about to share a few secrets with you that will give you a significant advantage when it comes to conquering those pesky tax withholdings. Ladies and gentlemen, let me introduce you to IRS publication 15-T. Yeah, not Mr. T, 15-T. This publication, which I guarantee you most people have never heard of, is actually where you would go to see approximately how much tax should be coming out of each and every one of your paychecks.
Really?
This worksheet in the publication shows us how to calculate this number rather quickly. And if we can calculate this number, we can determine if the payroll person at our company has our information set up properly in the payroll system. Because this is one of the first areas where you can catch an error if something is wrong. The sooner we catch an error, the sooner we can correct it to make sure that we don't end up owing or overpaying a bunch in taxes. Believe it or not, we could even run this test before receiving our first paycheck, because as long as we know roughly how much we'll make on our first pay period, we can figure out approximately how much we need to be withholding based on these withholding charts. By using publication 15-T, worksheet 2, we were able to create the same worksheet in Excel. We took an example of an employee named Chipper who files single.
Chipper made $2,600 per pay period on average. Using this number, we were able to back into what the withholding should be. Someone who receives payroll biweekly means they're going to receive a total of 26 paychecks throughout the year. Then by using the withholding tables inside publication 15T, we were able to find that for a person who receives biweekly payroll and whose paycheck is between $2,595 and $2,620 per check on average, and taking the standards of withholding, should be withholding $295 per pay period. By multiplying out the average withholdings per pay period of $295 times 26 checks, we can reasonably expect that by the end of the year, this employee, Chipper, will have withheld a total of $7,670. And by taking the average payroll check amount for taxable wages, $2,600 times 26, we can expect that Chipper will have made taxable income of $67,600 a year. This number is important because we're going to be doing a tax projection later in the video.
What you'll find is most people tend to throw their pay stubs away, but these pay stubs are actually vital pieces of information that we can use to check against our withholdings to make sure everything is on track. I would expect to see with the withholdings from our first pay stub that they are very close to the calculation we arrive at. If not, this may indicate something is wrong and we will be withholding too much or too little. We can take this exercise a step further by projecting our total withholdings for the year. This is a technique CPAs such as myself use to do tax planning for my clients. If the amount of money withheld every pay period is relatively the same, we can multiply that number by the number of remaining pay periods for the year to arrive at our total projected withholdings by year end. This is easy to do when a person only has one job, but challenging to do when multiple jobs are involved or multiple people in the same family are working. Although the number will likely not be 100% accurate, it should give us enough confidence to let us know if we are on the right track. Now that we have found a way to project our withholdings, it is time for us to now project our total tax liability for the year. The easiest way I have found to do this for people who make their living through wages is by using the free IRS withholdings calculator located on the IRS website. The IRS has significantly enhanced this tool, and once we become proficient at it, we can estimate our total tax liability for the year within about 10 minutes or less. I tested the withholding projection using publication 15T versus what my results were through the IRS W-4 calculator, and the results were almost identical. I even tested it against my professional grade tax software. Now, if we have multiple jobs or are married, this calculator will work, but we might find it easier to use existing tax software. By creating a mock tax return in the most recent version of our tax software, such as TurboTax 2021, we can quickly project what our tax liability might be for 2022. This is because tax rates and tax laws typically do not change drastically from year to year. So by running our numbers in 2021 software, we can quickly project what our tax liability might be relatively closely for tax year 2022. This is a common technique that CPAs, enrolled agents, and tax professionals use to project their clients' tax liability from year to year. By going through this process, we can quickly estimate if we will get a tax refund or owe taxes come tax time well before the end of the year. That's because, one, we can project what our total tax liability might be based on what we expect our total taxable income to be, and secondly, we can project what our total withholdings might be by end of the year. And we combine those two numbers together, we'll know whether we're going to get money back or possibly end up owing. Now, we have to be mindful of other forms of income we might be receiving that aren't subject to withholding, such as business income, income from investments, maybe we have tax credits and things like that. But if we take those into consideration as well, we can arrive at a fairly accurate number.
When a person has multiple types of income outside of their normal day job, like business income, investment income, farming income, rental income, and things like that, what you'll find is that there is a spot on the W-4 on line 4A to withhold additional taxes from your paycheck at your job for that additional income. But this is something that is rarely ever seen used. In fact, what we found that the easiest way to go about calculating that tax on that income and to pay that tax is actually using a concept known as estimated tax payments. By using estimated tax payments for these other fluctuating sources of income, we could easily adjust what we pay in each quarter as the year goes on, which is usually much more efficient and less of a headache than constantly redoing our W-4. We actually have a video on the channel that can help you address how to calculate tax estimates for your other income sources.
This past tax season, I had 3 new clients come to me, and the one thing that was in common with all 3 couples is that unfortunately their withholdings were drastically deficient. The couples had gotten raises, they had really good incomes, really good jobs, but their withholdings were just no longer keeping pace. And unfortunately, these couples ended up owing, when you took the combined federal tax liability and state tax liability, somewhere between $8,000 to $12,000. I'm now working with these clients to correct their withholdings and giving them different tools and different options to keep current with their taxes and try to help them prevent this tax liability in the future. In a future upcoming video, I'm going to show you the process and some of the steps, things to think about in order to correct your withholdings. If you are finding yourself in a current situation that I just described, where you're owing a lot of money every year and you can't figure out why, it's likely because there's something wrong with your W-4 or your withholdings. So we're going to walk through that in an upcoming video. So what I would encourage you to do is make sure you're subscribed to the channel so you don't miss it, and make sure you turn on bell notifications because YouTube will often hide my videos. Please, if you want to help me grow the channel, share this information out with others. I would greatly appreciate it, and leave a like on the video. You can contact me for professional accounting services by visiting my website, MikeKellyCPA.com. I hope you have a wonderful week, and I will see you all in the next video.